This is Rod Kusin, Spooman for Risk, on Friday, October the 8th, 2010. If you have looked at our videos of late, you know that we have designed a new indicator. And in the course of producing this new indicator, we not only have a very accurate indicator for trading the Emini S&P 500, but we also have designed a calculation that allows us to anticipate what the general trend of the market will be, and essentially then what direction we should trade in. Now, unfortunately, we don't have a huge amount of data to review with you here, because we've only been tracking it now for just a relatively short period of time. But the level of accuracy is significant. So what I'm going to do here is give you a little insight as to what we're doing. Now, these numbers on the chart, particularly right here, FV stands for fair value. What we've done is we've run some calculations to determine certain premium levels above and below fair value. And we asked our computers to tell us what the premium levels would most probably be at when the most significant short trades took place. So these numbers in this column labeled upper are the calculated premium values where we expected the most significant short trades. This next line, our next column, represents the premium values that would most significantly produce long trades. And let me clarify. Again, this is a fair value level on the premium. And the premium is the difference between the futures and the cash index of the E-mini S&P. This number is also calculated by reading the premium. And in this case, we're talking about the high of the premium. Whereas in this column, we're talking about the low of the premium. And we're referring to this based upon a 100 tick bar premium chart. Now, here's where the fun begins. We take the difference between the upper level and fair value and the difference between the lower level and fair value. So it's a very simple mathematical equation. 488, 407, the difference between those two numbers is 0.81. The difference between these two numbers, 521 and 488, is 0.33. Now, what we found when we ran these calculations is that whichever of these two numbers is closest to fair value will determine our market direction. So, for example, on this particular date, this number, 33 was closer to fair value. So the lower number was closer to fair value, and that indicates a long trade. Whereas on the next day, the upper number was closer to fair value, and that should produce short trades. So if it's lower, it's long. If it's upper, it's short. It's pretty much that simple. And when we look at the best trades of the day, during the course of this brief period of time, we have been, for all practical purposes, about 90% accurate, 100% accurate over most days. But on this particular day, right after around 11:30 on the 7th, the calculation continued to suggest that the market was short. Yet the market rallied up significantly. And in fact, it was basically 100% retracement during the course of the late morning to the close. 100% retracement. I'm going to show you that in a minute. But the indicator, nevertheless, the calculation said, we're short. Now, what are we accomplishing from this calculation? Number one, it's telling us what the overall market direction should be. So by way of trading in agreement with that direction, we eliminate, or at least substantially reduce, the chances of taking a loss. So that's the basic reason for this. But now let's take a look at October the 7th. On the 7th, before the open, the market had rallied up strong. As it did, however, these horizontal lines indicated potential retracement points. And these are done automatically by way of our indicator. We get here into the open, and as we indicated before, our indicators suggested maintaining a short posture. But even so, look at this. The indicator, right after the open, as the market was dropping, projected a retracement point. And this was done automatically. We don't draw these lines after the fact. It's done by our indicators. Well, what happened? All right, so the market continues to pretty much go sideways for about an hour, and then down she goes, right down to our retracement point, way down here. But as it dropped, it left retracements above the market. Now that information, again, done automatically, was not something that we could really act on because the indicators were suggesting that we should maintain a short. And I don't necessarily mean stay in a short, but that when we take trades, our best trades are going to be short. And we took a few. They didn't make much. They were profitable, but not very profitable. So that's why we say, there was about a 60% profitable trade here. But after the close, the market rallies right up to this retracement point that had been pre-calculated from the beginning of the day, and then look at what happened. The market tanked again in the overnight, completely tanked, and this entire rally up was lost in the overnight market. So while the indicator said stay short, and we were taking short trades, we weren't really making anything until after the market closed. And in the after hours, it tanked. So was our indicator right? Well, I guess that's for you to decide. But in my estimation, we're definitely onto something. Definitely onto something. And this looks very exciting, because if you can have an indicator that'll tell you where the market is going to go before it gets there, tell you with high accuracy precisely when to execute your trade, and to know what direction to trade in for your best possible trades. Oh, and by the way, the indicator will also give you a warning when the market is moving against you, so that you can take appropriate action and keep yourself from taking a loss. If you've got something that can do all of that, that's a pretty good system. And that's what we have available now at RSKsys.com. So we invite you, give us a call, ask some questions, contact us. We'd be happy to go over what we're doing, a little bit about how we're doing it, but be happy to give you a live demonstration and show you with a fairly simple indicator. And I call it fairly simple because, yeah, there's maybe, what, a 2-day learning curve? I think you can handle that. Yeah, it's only about a 2-day learning curve. It's a very simple thing to use, but it accomplishes so much. So it's simple, it's easy to learn, it's accurate, and you're going to make money. My goodness. I can't even think of anything better than that. So with that thought in mind, feel free to comment on our videos. Give us a call, email us, ask for a demo. We'll be happy to help you out. And you can look forward in the days ahead to future videos showing you the accuracy of the system, showing you live pulling trades, and so on. So all I can ask is just continue to watch and see what we're doing here at Risk. So with that thought in mind, I'll leave you with a good weekend thought. Stay profitable, stay happy, keep focused. This is Rod Kusin and Spooman for Risk.